Rich people don't keep their money where poor people keep it. Let that sink in. If banks were the best place for money, the richest people in America would keep everything there. They don't. And stay till the end, because I'll share a bonus habit of wealthy Americans that almost nobody talks about, and missing it could quietly hold you back for years. So the real question is not, is my money safe? The real question is, where do rich Americans actually keep their money? First, let's kill a myth. Rich people do not hate banks. They just don't trust banks with growth. They use banks for one thing only: liquidity. That's place number one. Wealthy Americans keep a portion of money in high-yield savings or money market accounts, not to grow rich, but to stay flexible. This money is boring by design. It's there for opportunities, emergencies, and fast moves. But here's the difference. This is a small percentage, not their whole net worth. Now place number two, U.S. Treasury bills. This is where rich people park money when they want safety without bank risk. Treasury bills are backed by the U.S. government, short-term, and predictable. No drama, no long lock-ins, no guessing. When uncertainty rises, smart money flows here. Now place number three. This is where real growth begins. Index funds and ETFs. The S&P 500. Total market funds. Dividend ETFs. Rich Americans understand one thing very clearly. You don't need to beat the market. You need to own the market. Slow, boring, powerful. Compounding does the heavy lifting while emotions stay out. Now here's where most people drop off, but the rich lean in. Place number four, businesses. Not just startups, not flashy tech, boring businesses, cash flow businesses. Because businesses give what salaries and savings never can: control and leverage. This is why the wealthy don't ask, how much interest am I earning? They ask, how many income streams do I control? And finally, place number five, assets that beat inflation. Real estate, equities, productive assets. The rich hate one thing more than risk. They hate guaranteed loss. And inflation is guaranteed loss for idle money. Now here's the bonus truth I promised. Rich people don't put money in places. They give money roles. Safety money, growth money, opportunity money, freedom money. Poor and middle-class people mix everything into one account and wonder why nothing changes. Now I want to ask you a real question, and answer honestly in the comments. Back-end index pointing right, if banks disappeared tomorrow, how much of your money would still be working for you? And if you want to understand how much cash is actually too much cash, and why holding more money can sometimes make you poorer, that's our next video. Make sure you subscribe, because missing it could cost you years of progress. Smart money moves early. Don't stay behind.